Canada, long a close economic partner of the United States, is making a strategic shift. The country is actively pursuing trade diversification, aiming to reduce its dependence on U.S. markets. This move signals a significant change in Canada's economic outlook, prioritizing a more globally oriented approach to trade. The decision to diversify is not a sudden one. It stems from a confluence of factors, primarily the desire for greater economic stability and resilience. By expanding trade relationships beyond the U.S., Canada aims to cushion itself from potential economic shocks originating from its southern neighbor. This diversification strategy involves strengthening ties with existing partners and exploring new markets. The European Union, with its large consumer base and stable economic environment, has become a key focus for Canada. Beyond the EU, Canada is also looking to Asia, Latin America, and other regions to broaden its trade horizons. One of the key drivers behind Canada's diversification strategy has been the unpredictable nature of U.S. trade policy in recent years. The imposition of tariffs on Canadian goods, particularly steel and aluminum, created significant uncertainty for Canadian businesses. These actions strained the long-standing trade relationship between the two countries and highlighted the vulnerabilities of relying too heavily on a single market. Beyond tariffs, the shifting political winds in the U.S. have added another layer of complexity. Changes in administrations and trade priorities have made it difficult for Canadian businesses to plan for the long term. This lack of predictability has further fueled the desire to diversify and reduce dependence on the U.S. market. The pursuit of diversification represents a strategic move by Canada to regain control over its economic destiny. By reducing its reliance on the U.S. market, Canada aims to create a more stable and predictable trading environment for its businesses. This, in turn, is expected to foster long-term economic growth and prosperity. Central to Canada's trade diversification efforts is the Comprehensive Economic and Trade Agreement, CETA, with the European Union. This landmark agreement, which came into effect in 2017, has significantly lowered trade barriers between Canada and the EU, leading to a surge in bilateral trade. CETA has eliminated tariffs on a wide range of goods, opening up new markets for Canadian businesses and providing consumers with greater choice. Beyond traditional goods, CETA has also paved the way for increased cooperation in the energy sector. The EU's need for stable and reliable energy sources, particularly in light of geopolitical events, has created an opportunity for Canada to become a key energy partner. Canada, with its vast reserves of oil and natural gas, is well positioned to meet this growing demand. The strengthening of ties between Canada and the EU extends beyond trade and energy. The two regions share common values and a commitment to multilateralism, making them natural partners on the global stage. This partnership is expected to deepen in the years to come, encompassing areas such as climate change, security, and innovation. Section 4: Canada's energy exports, pipelines, LNG, and the pursuit of new markets. Canada's energy sector is poised to play a pivotal role in the country's trade diversification strategy. With an abundance of natural resources, particularly oil and natural gas, Canada is seeking to expand its energy exports to global markets. This involves investing in infrastructure projects to facilitate the transportation of energy products to new destinations. One such project is the Trans Mountain Pipeline expansion, often referred to as TMX, which will significantly increase Canada's capacity to export oil to Asian markets. The pipeline, which is expected to be completed in the near future, will provide Canadian oil producers with access to new customers and reduce their reliance on the U.S. market. In addition to oil, Canada is also exploring opportunities to export liquefied natural gas, or LNG. With several LNG export terminals under development on the country's west coast, Canada is well positioned to become a major player in the global LNG market. These exports will provide Canada with a diversified customer base and generate significant economic benefits. Section 5: Redefining North American Trade. Diversification as a path to resilience. Canada's trade diversification isn't about abandoning the U.S. The U.S. remains Canada's largest trading partner, but overdependence on the U.S. is fading. Canada is focusing on resilience and a global outlook. This shift impacts North American trade, moving towards a balanced, diversified relationship. Each country strengthens its economic sovereignty. Canada's diversification secures its economic future, reducing U.S. reliance, forging global partnerships, enhancing resilience, reducing vulnerability to shocks.